Growing rumours that the Federal Reserve is about to do a pivot. The disturbance in the UK Gilt market sent a warning signal to financial markets that making the wrong step in tackling the cost of living crisis and surging inflation risks serious disruption with potentially serious ramifications. So if the Fed are rumoured to be considered slowing down their path of hikes, take a look at the S&P 500. On Monday, we saw S&P 500 gain with the US ISM Manufacturing PMI missing across the board, which meant the market would be pricing in more of a chance of a Fed pause based on that missed data. So if the US ISM Services print on Wednesday misses and the headline comes in, say, below 54 and prices paid below 65, then we could see a decent leg up in the S&P 500 again. Now, do note the strong seasonal pattern for the S&P 500, that over the last 22 years, it's gained 16 times between 9th of October and 6th of November. So, although we saw falls in the global financial crisis of 2008 and the time of stocks falling in 2018, generally speaking, there's either minimal gains or fairly decent potential returns in the S&P 500, which you would anticipate if the Fed did do a pivot. The major trade risk here is the Fed don't pivot and keep to a hawkish rate path. That's the main risk. Also, earnings could still move sharply lower, even if the Fed do pivot. Remember, HYCM clients can access the SeasonX product in order to analyse over 25,000 different currency pairs, indices, commodities, as well as individual stocks. Please contact your account manager for a free trial to get started right away. Certain products and services mentioned herein may or may not be available to all clients, depending on which HYCM Capital Markets Group entity their trading account adheres to.